Hello everyone and welcome to Crypto Ripto. So today's rundown is going to be the charts. Bitcoin, Ethereum, what's happening with it? Where's it going to go? Is it consolidating? Is it going to go down? Is it going to go up? What we think on the channel is going to happen and sort of what's going to happen in the next coming weeks and months. And also we're then going to look at the market. There's a lot of fear out there at the moment. There's a lot of scaremongering saying the bear market's here, the bull run's over, and we're going to give you kind of our take on it, more my take on it, where I think it is, what I think's happening and where I can see it going. Then we're going to look at quickly some of the news, some of the good news in crypto, not some of the FOMO or the FUD or the crap that's out there. We're going to look at some of the great stuff that's happening, which is getting overlooked in my opinion at the moment. Great projects that are bringing out some news, great fundamentals and some great stuff that's happening within the crypto space. So if you want to hear more on this and you want to get ahead of the game, stay tuned and let's get into the video. Hello. So what is happening in the charts with Bitcoin? And we're going to go through sort of where I see it, what's been happening, the consolidation phase that I think we're in, and we're also, a lot of you may have heard this whyckhoff kind of scenario and how it's been playing out. And I'm going to tell you, if you're a firm believer of that and you think that is playing out, where are the certain stages that we're coming into and we're going to go into. So let's start with having a look at the BCT chart. So as you can see, Bitcoin is not really doing anything great at the moment. We're at a consolidation phase in my opinion. Bitcoin's sort of had a little dump down here when it came out of this channel. This was the major crash. It went in, it was starting to go in this little bit of channel, and then obviously just before the bank holiday we had quite a bit of a down dump into this, what was my buying box back in when we had the crash, and we sort of like come out of it and sort of climbing out of it. Now what does this mean? Well, a lot of you would have heard the stage about the whyckhoff scenario, you know, where it's sort of at the SC, the sell climax, then we had the auto rally which went up, which was about when it hit the 42,000 stage. Now if I just show you on the chart, and it'll make a lot more sense, is when we had this correction and the whales manipulated it, and we had the sell climax, which was the whales selling off to try and shake out all them weak hands, trying to get all that retail money in and cash cows, trying to squeeze every last penny they can out of you to scare you into selling everything low. That was the sort of sell climax stage, and we went all the way down to 28,000, all the way down here. Now then we went back into what's called the auto rally. Now I think we hit all the way up to about highs of about, on here we're showing about 41,000, and this was the auto rally. Then we consolidated a little bit there, then we went for the second test. This is where the whales again want to squeeze a little bit more money out of the retail investors who sort of brought back in here at a lower price. And this is following the whyckhoff scenario straight to the T, the sell climax, the auto rally, and now down to the second test when we hit the 31,000 mark, and we shot back up into what I think is the phase B, the consolidation stage. Now the consolidation stage will be here when we start hitting anywhere. We'd like to see it hit a bit more here, start ranging from around about 46 to the 41, 42 mark if we break this resistance. And you can see we're coming into a point where the moving averages, which have played out quite well in my opinion throughout Bitcoin, are about to cross into an upwards trend. Now when they do, I can see a little bit more of a consolidation before maybe a little bit of a dump back down here. We could see a bit more pain before we see the gain, and then once this is shaken out and the retail have sort of started to get a bit of momentum back, then the smart money will start buying. Now I always think that this will happen in the next few weeks to the next couple of months. We cannot tell like how this is happening in crypto because we don't know their plan, we don't know their economics, their engineering, or how they see things working for them. we've just seen a monthly close and it wasn't as bad as I expected. So now we could see a slight consolidation with an upturn. But what I think's happening is not a lot of people are selling their altcoins, which is putting a little bit, if they were selling all their altcoins and putting the money into Bitcoin, I think we'd see a bit more momentum. But people that went through this crash didn't sell as much as their altcoins. Although everyone's scaremongering in to say, oh, we're in a bear market and that, but if you have a look at the volumetrics and you have a look at all the charts, it all suggests that not a lot of people started selling their altcoin that were old into crypto. A lot of the new stuff that were in weeks and months, they panic sold, and a lot of the stuff got out, and the whyckhoff scenario played out absolutely perfect, and the whales were able to claw a lot of the cash that they were looking to do. But I just don't think they've had enough yet. I think they want a little bit more, but it's proving quite tricky to them, because obviously the people that are buying in now and the people that are investing is not a lot in the retail space, because there's still a lot of fear out there. The fear index has just gone back down again over the weekend, and the whales are seeing that. And also with all the YouTube stuff that's been going on, I think the smart people also see that we are a little bit informed now, a little bit more informed and a little bit wiser. So that's why in the charts we're seeing Bitcoin start to take a bit more of a momentum sideways chunk. Now, my personal opinion, and it's not financial advice, is that we're definitely not out of this bull run yet. We are absolutely not, for reasons of that. I just don't think that people have brought enough of what they wanted to buy, and the retail money is still fearful at the moment. So it's the smart money that's going to start buying into this, and they're going to see where the bottom was, and a lot of people have called the bottom now. So this is where you see stuff get brought up very quick. Now, looking at the chart here, and this is the 4-hour chart. Now, someone will agree and some won't, but I look at the fundamentals on this quite a lot. And this is why I'm going to zoom all the way out now and tell you why I don't think we're in, sorry, get some water, why I don't think we're in a bear market or anywhere close. Because if you have a look at the perfect scenario of, with people that are new to this crypto world, you've on the charts and on Bitcoin, and we'll have a look at Bitcoin here, you've only ever experienced one, what you'd class as a major correction, which was all the way back in sort of like, I'd say the major correction that you would have felt was back in March, which would have been here. But if you have a look at the correction that we had before that, back in sort of like February time, and you can see the patterns are playing out exactly like they are now. You have a big period where everything's getting brought up, you have a little bit of consolidation, a sell-off, and then things get brought up again. Now, if you have a look at the two fundamentals here, and I'll just put the brush on, is you can see the trends forming. And obviously with technical analysis, people that know that this is based on emotion, buying emotion and selling emotion in the market. Now, if you just pay attention to this area here, and just have a quick look at the pattern that's formed, the W. I don't know why that is going like that, but if you have a look at the pattern here and what is forming, and you see here after a bit of a correction, and you have a look at the pattern that's forming here, obviously after a little bit of a correction as well. Now you can see that if we are following this kind of trend up, and we've dipped below the moving average trend, and then bam, we're more or less at the same points here where we were. Then we had sort of a relief kind of rally up a bit, then we had a big like sort of similar kind of dump correction, then we went back on to sort of like play out to all-time highs where everyone was in a euphoric stage. We were singing Pump It Up, we had laser eyes, everything was going crazy. Now that's just one scenario. The other scenario why I also don't think we're in a, well, it was why I know we're not in a bear market at the moment, is because everyone's sort of got this vision in their head at the moment. The whyckhoff scheme's playing out perfect, the whales are the ones manipulating it, etc, etc. So if that is the case, and you're a firm believer of that, and I'm a firm believer of that as well, is the whyckhoff situation now says that we go on to another bull run. We start climbing from, we have a consolidation, we might have a little bit more of a dip here, and we go on to all-time highs again. We've not had the euphoric stage yet, where if you was managed to be in a bear market before, maybe the bit of the one that was in 2018 or the one was in 2013, you know, you have a euphoric pump off, kind of face melting, kind of, you know, 30-40% daily kind of, I don't know what you would call it. Like for me, it was excitement. It's euphoria, it's excitement, it's everything that you want from it. And we've not had that yet. We did this where we had this little bit here. It took us a long time to get into alt season. It took a long time for Ethereum to break the 1800 to the 2000 mark and then start going up. And we didn't have the euphoric kind of face melting gains. So this is the stage where we're going to go into, and this would fall in nicely with the whyckhoff situation. So that would tick that box. If you believe it's the whales, and this brings us on to the market, so the whales that are manipulating the market, then the market has not seen enough cash, enough volume coming into it. You want to see buying and selling with a lot of volume. Now we had a lot of volume when the whales would come into the manipulating here, but when it was all the retail here, you see the whales will want to pump it up here, and then they get it up, and then the retail come in, you see the volume kind of metrics here, and then the whales dump, you see the volumes here. The consolidation phase will be the whales buying back up again. The smart money will be buying all it back up again, and what that'll do is that'll bring them on to the next stage of their plan, which will be to bring all of this that happened here right up here, right up to the next stage. So this will climb up here, it'll break this, so it'll be pretty much this pattern again, and we'll see the 100,000. We may even go up to 120,000, who knows. But this is only phase one. The phase two, where we see the kind of big blow off tops and the stuff like that, is absolutely, in my opinion, coming right at this stage here. So we're going to see, sort of, once it's retested and broke up to here, it's only got to go up to here. We're looking at around about the 5x, I think, or 4 or 5x from here. But we've definitely, if people think we're going to sort of plan out a bit here and start dropping down here like this, and it's just going to be like a mountaintop, I cannot see that happening, because I cannot see that people have had enough money for that. The institution, the whales, have not had enough money. I still a firm believer that we're going to consolidate. We may have a bit more pain here, but we're definitely going up to like the hundreds of thousands mark now. And the same goes for Ethereum. You know, Ethereum, it had that big run, but it was, the reason it had that is because it was undervalued. It was so underperforming for so long that it was due a massive rally. Now once the smart money and the whales had manipulated the Bitcoin to how they wanted it, if you have a look at kind of how Ethereum climbed here, and this is where you see the kind of volumes that the retail money have put in and stuff like that. Once it needed to go up, if you have a look when the smart money comes in, you have a look at the volumes are a lot higher. So when the smart money wanted to sell off and dump out to manipulate Ethereum the same way they do Bitcoin, you can see the volumes came quite a bit more than they were in the retail phase. Now this is just my opinion, obviously it's not financial advice, but after studying markets and studying technical analysis for so many years now and looking into things, obviously we knew about the whyckhoff kind of scheme, but we never, and there was one guy that called it kind of like a month ago, cryptocurrency's never seen this kind of manipulation before. It's never had these kind of trading patterns. It's never had this kind of pattern where, you know, it's been manipulated by large volumes. This time around with this bull run, we did want the institutional money coming in, and we did want the smart money coming in, but with smart money comes smart problems, and the smart problems are it gets manipulated a lot easier. But after saying that, and after all that's said and done, Ethereum is definitely, in my opinion, I know a lot of people are calling Ethereum a $10,000, which is quite high from here, if you ask me. I think Ethereum's going to go between $6,500 and $8,000. We're going to see like at least that from Ethereum, and that's going to be in the next stage. And if you think we're only halfway through this year, and in previous years the altcoins and stuff have always done well around the kind of between September and December mark, and this falls in perfectly with the people that are buying and consolidating these low prices, we're going to start seeing more and more blow off tops. So these, in my opinion, are the opportunities where, if you want to sort of trade and invest like the smart money, these are the key areas where you need to look at to start buying in and start making a plan of, okay, if I'm buying at these levels, I don't want to squeeze the top off or get out of the top. I need to make a plan of how I'm going to buy here and sort of take profits all the way on the way up, and maybe even sell a little bit on the way down. But also, you need to be well and truly out, because as we've seen from the manipulation that's in there, it's weeks and months on the way up, it's minutes, hours, even a day on the way down. It drops a hell of a lot quicker than it goes up. So we really don't want to be waiting to try and take profits on the way down. We want to be sort of setting milestones on the way up to take away our profits on predictions of where we think these prices are going to go. And this applies to the altcoins as well, not just Bitcoin and Ethereum. But if we just sort of go over an overview quick, I think if people are going down the Whyckhoff method, it's playing out nicely. We're in a consolidation phase. We're going to start looking at Bitcoin around about the 40,000 mark, Ethereum around about the 2,800 to 3,000 mark, and that would play out Whyckhoff's method, where we're in the second test phase. So we were just coming out of the second test phase into phase B, of where we went down to 31k, and we're just moving up to get confidence and buy-in from the retail investors, because there's still a lot of fear there, which they want to shake out and bring into greed. And also, if you want to play out the whale manipulation, this is how they do it. So you've seen a lot of things on how whales manipulate the market. They spread FOMO in the news, they spread a lot of information about that makes the weak hand sell. So all in all, if you think this is not right, leave a comment below, you know, smash a like on the video, subscribe, put the bell notification on so you know as and when these videos are coming. It's not anything to feed an ego. I'm not here to sell likes. I'm not here just to get channel clickbaits and stuff like that. This is absolutely what I believe is happening in the market. It's how I trade on my portfolios, which I've got a lot of, and it's how I literally put my money into this kind of area on the knowledge I know. I do not want to be trying to play around with the market at the top. I want to be sort of playing around with the market at the bottom and selling it on my way up, you know. Or if it's an instance where I know sort of like a market prediction phase on the way up and we're still low, I'll even buy a little bit on the way up and sell a little bit on the way down, what I think off the top. But either way, I'm going to stick to a key plan, which I think everyone at this stage, ready for this second final phase of bull run, needs to start having a plan so they don't get caught out like they did last time. So now obviously we'll go into the news. So the news, and I'm going to just pick a couple of bits of news just to put some perspective on what the analysts are saying that's happening out there on the market, and what I think is, you know, kind of fundamental, and there is a bit of truth on it. Now obviously everyone reads the news and everyone can interpret it their own way, but this is just what I believe is happening a little bit on there. Now in here we're saying Bitcoin accumulation uptrend can create a 2013 style BTC price, which was a double pump. Now obviously this would make sense why the sharks are sort of circling. You've got sort of retail money here, the nice dolphins, and you've got the smart money that come in and sort of cane everything up. Now the reason, and we'll go into look at this, I'll try and zoom that in a little bit. Sorry about this, just trying to zoom. Oh, it won't zoom in anymore. But if you can see there, in 2013 we had sort of like the euphoria stage where we pumped up a little bit, we dropped, which was like a false top, and we pumped back up again before we went into the bear market. Now this is what this article's saying in the news that's happening now. You know, all the trends are there, the fundamentals are there, we've sort of hit a small phase euphoria, we're going to do a double top and we're going to pump up. Now I personally think the bull run's not over, and you know, a lot of people in the market don't. I not necessarily think we're going to have sort of like a double top like this. I think we're going to have what's called a step process like this, where this, but we're just, because there's a lot more money coming into the market and the retail investors are in there, I think this area here is going to be just a bigger version of this. So this is going to be this first stage here. We had this little correction here, then we're going to have another step higher, and then another step higher than that before we start coming into the bear market. So if we was going to draw that on here, we'd have one step here, we'd have another step to about here, and then another step to about here, but just because obviously these are on a larger scale than this. And I do personally believe that that is the case. And as you can see in here, the analyst said only in the 2013 double pump scenario did this metric see a recovery. Should the LTHs continue to see their paper gains fail, this too may create a new source of overhead supply. On the other hand, the higher prices and the supply squeeze from the buying the dip would begin to resemble the double pump scenario of 2013. Now, when it says this, and this can be confirmed with a lot of volume that we've seen come off the market, I think it was around about 1.6 or 1.5 trillion came out of the market on the crash, and within hours the money went back in, ready for them manipulating people to sell everything high and then buy it back in low. And this would cause a false kind of top and more buying. But I think with the way everything's structured and stuff like this, it's going to play out on a bigger scale, kind of like, I think we're going to see 2 more of these on top of this. So I think within the news it's saying that, and that's going to play out obviously in Bitcoin's accumulation trend. Now in other news, and I read this the other day, and I don't know how much you want to sorry, I read this earlier today, saying JP Morgan. Now JP Morgan's one of them banks, it's obviously one of the largest, they're quite fear factory, they want to spread a lot of fun and FOMO out there, they're jealous that they didn't get in on crypto early enough when they should have, because they were dismissing it, in my opinion. Bitcoin price crash isn't over, says JP Morgan strategists. Now they're saying, based on Bitcoin's volatility ratios to gold, analysts forecast that Bitcoin will continue to trade between 24 and 36 in the midterm. The fair value for Bitcoin based on volatility ratio of Bitcoin to gold of around ×4 would be 1/4 of 145k to 36k, which is fair value Bitcoin based on the current volatility ratio, blah blah blah, jargon. What they're trying to say is it's not worth as much as gold. There's going to be more crash because of how volatile it is, and that's what their analysts are saying. But it's not, I don't think that's the case at all. I think it's the case of Bitcoin appeals to a lot more people, in my opinion, than gold does. Obviously, yeah, a lot of people trade gold on the smart money, on the stock market and stuff like that, but there's not as much retail buying into gold as there is into Bitcoin. And you can look at stats on that, you can look at the opinion on that. So how JP Morgan can sort of book it and sort of band everyone in that kind of category where the retail is the same as the smart money, it's just a little bit beyond me. So I don't know how their stats can get that, but that's banks for you. Hey, they want to sort of like spread this fear monger and factor and stuff out there so they can sort of like get people to sort of, because they'll probably be investing in Bitcoin themselves behind closed doors, just not made it public, and they'll want to shake everything out to get in or if they're not in, they want to get in at a much lower price than we were seeing in 60,000s. So let's just have a recap of today's rundown. The charts were showing that Bitcoin is playing out to the Wyckoff method, and we had the first bit, which was the sell check, which was when Bitcoin was about 28,000. Then we had the AR stage, which was the auto rally, where Bitcoin shot up to 42. It dropped back down to 31, I believe, or it might have even gone down to about 28. I'm not too sure. Into the second test phase. Then we're starting to see signs of growth now into phase B, where everything's getting consolidated and the whales and the manipulators are buying everything back up, ready for that second bull run, or well, just ready to continue the bull run and start getting that euphoria phase and getting people from fear factor to greed factor. So that's the way the market is. The market, to me, is still on an uptrend of, I know everything's sort of looking like a downtrend, but to me, if you have a look at the charts, we're still higher than we were a month or two ago. You know, it's like everything's still going gradually up and up and up. And in the news, we covered that people are not, well, the smart money is still circling sharks. They want a second bite of the cherry, and JP Morgan and the banks are still trying to spread a little bit of FOMO and fear. So I hope everything that I've got covered, it might have been a bit rambly, a bit waffly, because I get a bit animated and excited, but you know, I'm just trying to spread a little bit of you know, reassurance out there that I wouldn't say this if I personally didn't think it. And why I'm not a financial advisor, I do sort of give you my opinion and educational purposes on what I base on, and I do genuinely solidly believe in what I'm saying, and I do listen to a lot of other people and look at the sort of fundamentals of what they're basing it on. And we're still in a bull run. We're going to see a second wave and a second bite. We're in this period now where we're consolidating, where it's the buying phase if you want to trade like the smart money and the smart people. And also, it's sort of now's the time where we might go sideways for a little bit and we might consolidate in between small space ranges, but good things are on the horizon. So I hope you enjoyed this video. I hope it's been very educational for you. If you like it, smash a like, subscribe, smash the bell button. It really helps me, it really helps you to gain more content and keep up to date on this. I'm Christian, this is Crypto Ripto. As always, trade smart, stay safe, and don't get wrecked.